If you're thinking of investing in mid-cap stocks or funds, it's important to understand the advantages as well as the disadvantages of owning them. Mid-cap stocks are all corporations that fall into the market capitalization category ranging from $3 to $10 billion. It's important to note that mid-cap stocks often become the target of mergers as well as acquisitions by large-cap companies because their growth structure is attainable at a relatively low cost. Both small cap and mid cap stocks often fluctuate between the size categories that they are in, unlike larger companies. So, what are the benefits of mid cap stocks? They are less risky when compared to small cap stocks. When compared to large cap stocks, they have higher growth potential. Because they are considered more domestic compared to large caps, they are less exposed to currency fluctuations and slowdowns in the global economy because they stay in domestic markets instead of expanding to international. Mid-cap stocks are more established and have an effective business model compared to small caps. There are several cases where small caps will turn into mid-caps once the small caps expand their products and services to new geographies. So this all sounds great, but what are the disadvantages? Because there is less access to capital compared to large cap stocks, mid-caps can experience liquidity constraints and are typically more vulnerable when it comes to severe market swings. An important note to remember when investing in stocks is that more capital means an increase in both safety and tradability. Some other disadvantages of investing in mid-cap stocks is the possibility of investors experiencing periods of lower returns. Mid-cap stocks have far less analyst coverage compared to other size caps, which makes them more difficult and more time-consuming to research. Mid-cap stocks might be right for you if you don't want to pick individual securities. Having a domestic-centric focus can be both an advantage and a disadvantage. Keep in mind that if U.S. economic conditions falter, mid-cap companies may suffer more than their large-cap counterparts. This is because they perform well when there is an increased activity within the economy. So we've talked about mid-cap stocks, but what are mid-cap funds? Mid-cap funds can be bought as mutual funds or exchange-traded funds, also known as ETFs. They are a pooled investment that is focused on the companies that fall in the mid-cap stock category. Investors may choose to put their money in mid-cap funds because it allows them to easily hold a diversified portfolio in mid-cap stocks, and they tend to be more cost-effective too. But why would an investor choose mid-cap index funds? Mid-cap index funds provide investors with low portfolio turnovers, broad market exposure, and low operating expenses. Some examples of mid-cap index funds include VIMAX, PESPX, and FSMDX. So with all of this in mind, are mid-cap stocks a good investment? Before you choose, you need to consider the risk tolerance, time, and available resources to you. A good investor will have a diversified portfolio which consists of all small, mid, and large cap stocks. Lastly, you want to research mutual funds or ETFs that may fit your individual needs as an investor. By subscribing to A+ Investor, you can get access to our fundamental stock screening and research database programs. For more information about AAII's A+ Investor, visit AAII.com to sign up today. Check out the Education Hub, register for interactive online events, as well as learn about the numerous benefits and tools that come with being an AAII member. Thanks for watching. Subscribe to our YouTube channel so you never miss out on another episode. Happy investing!